Well, I will say this. By privacy, I can't reveal who I'm referring to, but they know who I'm talking about. Um, I have 7 individual charter members that have gone beyond the scope of what I taught and what I hinted at in a lot of things. But there's only so much I can go without causing personal issues in my life that I don't want to have to deal with. But they have done things in the direction and the little subtle hints that I lay down in some of the content. I point to spend time doing something here or start doing something here. I can't get in trouble for that. There's no way that anybody can say, you did, no. But the students have gone beyond that and they have not wrote a book. But I do have 7 students, he's not one of them, that literally are on the right path. And they know it because we've communicated. Okay, I've told them, I said, don't talk about it, don't share it, because what you're going to discover if you keep doing what you're doing is so close to what it is I can't show you. It's too good. It's too good for public consumption. It really is too good. And some of the things that you're doing are very, very close to that. So you're not just simply saying, well, ICT said this, so I'm only going to look there. I'm only going to do what he said there. There's times where I've mentioned and hinted saying, spend time looking at it like this. If you spend time between 9:30 in the morning, opening time for equities, to 11 o'clock, it's a very static 90-minute time period. It's not a cycle. It's just a very static portion of price action for the intraday range. If you spend time looking at that and you look for relative equal lows when you're bullish, see them on a 15-second chart. Note when they form. As soon as they form, note the time that it does that. And then how long does it run away above those before it starts to come back down? And when does it run those relative equal lows? By keeping a journal of when those things occur, you're going to start seeing an overlapping of a very specific element that I'm not going to come out and say, here it is, but you will see it.
I'm going to be covering a topic that I don't even discuss in my Patreon, but it is coming to my Patreon in the adrenaline tier. And a lot of that has to do with how to use the higher time frames in relationship to the weekly profile and daily profile, in relationship to time of the week, which is your economic calendar, and time of day, which is your economic calendar as well. So that's what a lot of this is going to be covering. But I think a lot of people are using the higher time frame wrong and the algorithmic theory concepts wrong. Not that anyone's even using that, because it's not just, oh, an algorithm theory. Like, you guys know what you're talking about. Stop marking just breakers. Stop marking just random stuff. Like, you guys don't know what algorithmic theory is if you're not doing this. And I'm only going to do this video one time. So looking at the monthly, you have just a run on stops in a monthly SIBI. So for the people who say wicks don't matter, don't listen to them. They don't know what they're talking about. They're lying. Or just remove the wicks and look at the bodies. Bro, the wicks are going to tell you a lot of stuff. But if you don't use these concepts how you should, then yeah, go ahead and ignore the wicks. I'm not going to ignore them. So looking at the monthly, you want to find your key levels. Dropping down to the weekly, what do you notice? What was that wick? That was sporadic noise, right? This candle, this candle, this candle, this candle, this one, and this one. What do you notice? Algorithmic theory wise, like for the people who want to talk about the algorithm and what it's doing that have yet got to pay out, what's going on? You have to understand how price is delivering. So looking at this run on stops here, you could see it came right back up into that monthly SIBI. Looking at this order block here, I'm going to annotate this green. You can call it a change in state. You can call it whatever you want. It is a change in state. So we're going to mark that green. And this is a weekly level. So we're going to be looking at this when we drop down. Now, what else do you notice other than this change in state? Not that you even noticed that, but you should see buy side liquidity sitting here on a weekly basis. See, it's already boring, isn't it? It's already boring, right? Now I'm getting somewhere with this, but you see the run on stops for the monthly, it wicked back in, you see change in states happening. So what do you do with that information? So using these levels, we're going to travel down to the daily. But another thing I want to point out is the CE of this wick. And I'm going to label this weekly. Dropping down to the daily, you can see those levels here. So what does that mean? Where am I going with this? You have the weekly change in state that happened here. Price ran down, hit the change in state. But most importantly, it's coming into this fair value gap here that's wide open. So now that these two levels here are relatively close, I'm just going to get rid of this and look at this. And in real time, it's going to be easier for you guys to do this and just know what levels to disregard. But working your way from a top down, you'll understand what levels are like prominent. You know what I mean? So looking at that weekly, you can see it wicked in there and then started heading up to what? The buy side liquidity here. So I'm going to start to remove these monthly levels because you can see they're lining up with what other PD arrays. You have a SIBI here. And when I drop down to the lower time frames, you'll understand where I'm going. Right now, you're not supposed to understand. So if you're like, I'm confused, don't worry about it. I'll tell you when it should start clicking. So now we're going to get rid of this weekly CE. Now we're going to get rid of the monthly high and low because we already worked our way down. So I'm going to give you guys a little chance to try to figure out what else is missing. You're not going to get it right. Drop it in the comments right now. What do you think I'm going to mark out? It's a PD array, but name it. What is it? An inversion, an order block, a volume imbalance. What is the PD array I'm going to mark? For me, it's the inversion. So we're going to annotate this orange, the high and low, and we're going to find the 50% of that. And if you think, oh, well, he's picking levels that I don't know, maybe this is not a good video. It might not be, but you will know where I'm going with this shortly. Once we drop down to that hourly, I would say, you would start to get the hang of what's going on. And the reason why this is important is because it plays a factor in now's price action. It was the catalyst for a pullback. And all you have to do is work your way up and down the range until you find what you really need to be looking for. So we have weekly buy side here. To be honest, this is my objective. This is not financial advice, but I'm looking up here personally. The CE, this is going to be the most important thing. This CE right here is what's really controlling the week. So we're going to be looking at price here and on these days here. And I'm going to show you how you're supposed to use these levels. For the people who think they know algorithm this and breakers, bro, this is what it is. Because if you were on that 1 minute chart and you could drop down lower, or if you were on the second chart and could drop down lower, you would still be applying these. So the fact that you have the monthly, weekly, and daily as a time frame, you can drop down and really show your skills for an algorithm. It's now. So looking at this being my draw that I like for the week, next week, and going forward until we get beneath to the lower end of this inversion, I like this as buy side. You know, I just like it. That's what it is. So what does that mean? We're going to drop down and study this day here. This current day, when it dropped down and came up, or when it came up and dropped down, this is where your algorithm principles work. Okay, right around here, this is where it should click for you guys. So looking from midnight to midnight, on that daily candle I just showed you, it wicking down into there and coming back up. Also taking sell side. Midnight to midnight, full 24 hours. What did I teach you guys in my 2025 video 1? How to view 24 hours. So you have midnight to pre-market, and then pre-market to 9:30. So looking at pre-market, you can see it just started tanking straight for this objective here, which is that daily busy. But it's important because what time of day is it forming? It's at pre-market. So extending this volume imbalance out, Now, why would you extend that volume balance out? Algorithmic principles that maybe you guys are not going to discover. You know what I mean? You might not discover it. And that's up to you. But I'm showing you what you should do for free, at least on YouTube. So looking at it run up and then head lower, we're going to drop down and study price. So now looking at pre-market to 930, what do you see? You see my revamp. So what do I teach you guys? 930 to 1030. Should put in your low of the day. So when I tell you from midnight to 930, where's the pools? There's only one pool. It's right here. It's literally the only pool. The only pool. Now we're going to drop down from a 15 to a 5. And also, when price is down here, okay? When price is down here, you want to be looking at this fair value gap anyway. From 930 to 1030 is being put in place. You can see that 15-minute CE right here. And what's right there, like I taught you guys on the higher time frame? A fair value gap. So we're going to drop down to a 1 minute and find the entry model that I teach you guys. However, I want to point out there is a opening range gap lower, okay? And this is very strong. It's not just the opening range gap, okay? It's everything else around it in a higher time frame PD array. You can already look at the CE of this. And I'm not going to mark it out, but you can just see right here, look at the price level. So now dropping down to the 1 minute, you can see, I tell you guys from 930, what do you want to see? If you're bullish, you want to see price run lower. Put in the low of the day between this time, and this is my free 2025 mentorship on this YouTube channel. It shifts higher, and you have a breaker entry here. You can buy this. For value gap here, you can buy that. Sell side liquidity being put behind here. But most importantly, you don't just want to take it to this high or that. You know, if you're a little bit worried about the concepts, these are easy places to take profit. But if you know what's going on in the grand scheme of things, like that daily wick with our bias being higher, you can take this whole thing all the way up to here like I did. And that's on this YouTube channel. I literally posted this trade with this logic. So up here was the draw, and you can see it delivered that. That's how you use algorithmic theory, okay? Everyone wants to talk about time and price. It's all about time of day. Yeah, it is, but what are you anchoring that off of? Because you're just picking random levels. You're not really having any premise of what's going on. You know, you don't even know how to navigate the pre-market. And this is not to you specifically. I'm just saying a lot of people talk smart money and ICT, but they don't know what they're saying. This is just one day I wanted to cover. We're going to go cover at least a day or two. We'll see. So that was a little lesson on this current day here, wicking down into there and how you could have participated in this day, because we all did. But looking at what happened today, I'm going to just point out the obvious. We have a volume imbalance here on the daily. We have the CE of the inversion still right here. So how would you navigate these two PD arrays? Because that's the premise you're in. You can see that daily volume imbalance right here. So extending the daily volume imbalance out to this current day, you should know that you want to trade ahead of FOMC. So this is probably the only gem I'm really going to give you. Everything else is for your study, but this is the only gem I'm going to give you. You want to trade ahead of FOMC. So pre-market is decent. I'm not going to say trade it, but that's what I did. So looking at pre-market, you can see we came up into the daily volume imbalance. Most importantly, we have a hourly fair value gap. You can see there's a 15-minute fair value gap. You see how it's all layering inside of these PD arrays? Okay, and the algorithmic part is about time of day when you blend the higher time frame PD arrays. That's the whole point. So looking at price, bounce off of it once, twice, 3 times. How do you know it's to sell here? We're going to drop down to the 1 minute. Mind you, we're going to be looking at the daily CE here. You can't forget about these levels. The algorithm doesn't forget about it. As you can see, it doesn't forget. Dropping down to the 1 minute, you can see price nudge into that 50% and the 15-minute fair value gap, and you can see it literally shift. Okay, these are all rules. Trade ahead of FOMC. Check. Even if you don't know the higher time frame stuff that I'm doing now, trade ahead of FOMC. Your move is right there. But if you do know how to implement time and price, then this would have made sense. You would have shorted this like I did. Fair value gap, 2022 model shift, liquidity pool that can turn into a trade all the way down to the daily CE here. And you don't have to fight these macros all the way down. You don't have to wrestle with it. You don't have to guess. You don't have to try to guess where the 930 is going to go. You know, like, you guys don't even know what trapping shorts and trapping longs look like. Like, if you know what that is, then you would know to stay away from the open. You know, you have to be trained to see these things. And it's not to discourage, it's for the people who are at that point where they want to know depth, because I'm getting a lot of questions about depth and high time frame stuff, and this is the answer. I simplify it. You know, I make it very simple. Midnight to 9:30, where's the pools? If you want price to go higher, just let your 9:30 go lower. You know, you start there, you know, and then you start using this stuff. This is how you know when to be positioned in a trade, you know, because a lot of people probably showed up for the open and didn't know what to expect. But if you want to be a little bit more seasoned, the move was here, okay? Like I tell you guys, 7:30, 8:30, or 9:30, expect a Judas. But how did I know the Judas was coming here and not 9:30? How did I know the Judas for the day was here? It was your economic calendar. You have FOMC news at 2 p.m. I'm going to trade the pre-market. Now, how do I know that? Well, ICT taught it. So coming back to the hourly, right? And we're leaving the higher time frame stuff. What does that mean? Daily. There's no 4 hour in here. Okay. Daily, weekly levels. I'm leaving them on my chart. And look at how each day is reacting to these levels. You can literally see a consolidation. Price does what? 8 o'clock pre-market, we drop lower. 9:30, we turn higher. And then we come back down, reaching for this fair value gap. How do you know? Final hour. Look at that. Go to my YouTube, go to Thursday, May 25 on my post. I literally told you guys, trade final hour. And that's what happened. It ran down into here. I said this at lunch. I said final hour is going to be the move. And it traded down into here. Fair value gap. Looking at the next day, price runs up higher into that daily level.